Two very notable things just occurred with the debt clock, and one of them is a sign of what's to come in terms of entrenched inflation, maybe even stagflation. We'll talk about it and so much more as we explore. The U.S. national debt, as you can see, it is ticking up dramatically here, $34.8 trillion as I record this video, and there's no sign of that slowing down, except for one major glitch. A very strange thing occurred the other day when this number actually zeroed out. That's right, zero national debt. Some think that that was a sign or a message that the debt clock people were wanting to send to us. But what about this $155 silver? Well, before we get into that, first I want you to know that this is a series that I'm doing on this channel, and I've actually not done a video on this for quite a while because there's not really been many changes except for the derivatives, and we'll get into that in a moment too. But I have a series called The Debt Clock and Silver, and I'm going to explain exactly what that means, but I encourage you to check out the playlist for other videos so you can see an historic record of what's been going on with the debt and with the paper to silver ratio. And that is what we're looking at here. When I'm talking about that, I'm talking about the M2 money supply for silver ratio. And that's what we're going to get into here. This number right here is what we're looking at, $155 per ounce. And I always have to explain this because people misinterpret this. This is not a price. That's right. This is not a price. If you take these numbers, any of these numbers here, and highlight over them, and then you were to go back and look and see exactly what that shows, if you highlight over that number, you can see what it says here. It is a ratio, and that's exactly what it says right above it. The dollar to silver ratio. It's the year-over-year increase in the U.S. M2 money supply divided by the yearly world production of silver in ounces. So this means that it's the number of dollars printed per year compared to the amount of silver that's mined in ounces per year. In a way, I think this is much more important than the dollar amount or the market price of silver. And this is why I'm doing these videos, to explain exactly what this means. This is an idea of how much money has been printed over the past year. How do we know this? Well, if we look over here on the Federal Reserve's website, this is from the Federal Reserve Bank of St. Louis, rather, and it's called the FRED, Economic Data, that we can see here. And this is the Federal Reserve Economic Data of St. Louis. Fed has these numbers. You can see that there has been a dramatic stoppage and actually a pullback, a constriction of the money supply, at least to some level, but you can see how dramatically has risen, really exponentially since the crisis of 2007 through 2009. We did see quantitative easings 1, 2, and 3, and it's just continued. And then we had the pandemic, and it was a massive increase with these PPP loans and stymied checks that a lot of us got. And then it peaked, and then it started to constrict somewhat. But what can we tell from this? Well, if we zoom into this, we're going to take a look at a different picture here. We can see, again, in 2020, the massive amount of money that's been printed. And then we can see here that it's scaled back a bit, but we're going to zoom in a little bit tighter here. And we can see here, from April of 2023, we started to see it tick up, then back down, and now it's ticking back up again. So we're back into printing money. Now, what does this mean? Why are they doing this? If they're trying to stop inflation, why would the Federal Reserve be printing more money? And by the way, when I say print, I mean digitize. They're really digitizing more than anything else, and they're flooding the market. Well, because Congress has told them to do it. You know, that's we've had several very, very big spending bills come through Congress, and they have been signed into law now. So they really have no choice. Yes, they can tax us, but that's going to take Congress either letting the tax cuts expire, which I believe they're going to do unless it's stopped dramatically, they're going to just print more money, or they're going to try to raise taxes on the rich. There's not enough taxes they can raise in order to meet their spending needs or spending demands. There's no needs. Most of it is not needed, by the way, but nonetheless, that's what they're doing. And so they can do this. They can print money. Guess what they can't do? They can only mine so much of this. They can only mine so much silver per year. And then, they're trying to find more silver out there. And there are times when mine production can increase or decrease, but it's been mostly decreasing slightly over the past couple of years, only slightly, but nonetheless, it is decreasing. And when you think about the amount of silver eagles, it's been tough for the United States Mint to meet the demand for these eagles a year or so ago, and so the premiums have gone up pretty dramatically on them. But that is where we are at now. And so when you see this number now finally start to make its way back into the debt clock, it gives you some pause. And this is very important, folks, because for quite a long time, this number was sitting at 0. And if you look through the playlist of the videos I've done in the past, you will see that I've talked about it several times. In fact, I started doing videos on this number. And this number really hasn't changed a whole lot because I started reporting based off of the dollar to silver ratio over the last 5 years. And of course, as they continue to tighten or keep it the same, this number is going to eventually go down over the course of 5 years. But nonetheless, it has not happened. And look at this; it's back up again. It's now $155 per ounce. And if you measure it out over 10 years, you can see that it's not a whole lot less than what it was 5 years ago, to $1,121 an ounce. Now, the dollar to silver ratio now, year over year, during the times of the pandemic, and when I've done these videos, it got up to $5,000 per ounce. That's the dollar ratio to the amount of silver mined year over year. In comparison, you go back to the initiative of the Federal Reserve Act of December the 23rd, 1913, the dollar to silver ratio then was $2.77 per ounce. So that gives you some perspective there, as you can see. And of course, we also have the same thing with gold as well too. Although I would say that that's a different thing. We can see obviously that's a lot less than the price of gold. But you look at it over the course of 5 years and 10 years, a little different story there. But here we are, $155 per ounce in the dollar to silver ratio. And it's pretty remarkable. But, what's happening here? We've got a debt that is unsustainable, but they are sustaining it to the up end. It continues to increase at a dramatic pace. So it's only sustainable until it doesn't, until it's reset. The $0 national debt that the debt clock people had in, was it a glitch or were they sending us a message? Is there going to be a reset? What's going to wipe out the debt? I don't know. If we have sound money and they have other things down here, they've really expanded what they have been talking about in their now their X page. I've done videos on them in the past, but it's hard to keep up, and a lot of the messages are very similar or the same to other messages, so I stopped doing those. But they have some theories here that about the kind of currency that we have or could have. And when you think about it, the credit card debt, $1.3 trillion. National debt, personal debt per citizen averages at $75,800 or almost $900. The average card holder has $8,312 in debt. I remember one time it was $14,000. Maybe that was per family. But still, it's crazy to think about all of the debt that we have, and then look at the interest we're paying. The total debt, when it includes everything, is over $100 trillion. So there's a lot of problems there all over the place. Deficit spending is what's contributing to this. And so that means that having some of this in your portfolio is definitely something that is a good idea, because you can't print silver. And silver's price is going to fluctuate based off of the market. But think about the number that really matters much more, much more, is going to be how much silver is mined per year compared to how many dollars are printed per year. $155 per ounce. And by the way, That's not to say, and I'm not making any inferences or suggestions that the price should be anywhere near that. It's a completely different. They're mutually exclusive because there's a lot of different things. Why, Bill? Because of this number, the paper to silver ratio now, the derivatives market, 390, almost 400 to 1 silver derivatives out there, which can be both suppressive and inflative. In other words, we see now, especially with Bitcoin, that when Bitcoin ETF made its way, well, the price really shot up there. And it happened with silver too. Now it's probably more suppressive than anything else, especially when you can short it with the futures market and the like. So I think this is something that you have to keep in mind as well too. And I think that's an important number as well, to realize how much of the derivatives are out there. But the dollar to silver ratio is the most important. You can't print silver. That's the message that I want to send in this. No matter what the price is, and the price has been fluctuating a lot lately, it's been insane. But here we are. Silver is a metal that I think it's a good idea to have in your portfolio for the reason I've stated. For $155 silver, that ratio. If that doesn't encourage you to stack, I don't know what else will. It doesn't really matter the price. And by the way, when I say stack, many of you that are watching this video already have silver. At the very least, hold on to the silver you have. And if you can find opportunities to buy in the dips, I think it's a good idea to do. If the price shoots up dramatically in one day, don't buy. Be smart about it. Use enhanced dollar cost averaging. Buy more when the price goes low, especially in this volatile market. Take advantage of the dips. So there you have it. This is, again, the newest video in the series. Check out the other videos. I'll post a link to the playlist. It's very interesting to go through some of those videos and see what was being discussed and how much lower the debt was during a lot of those videos compared to where it is now. $34.8 trillion. It's going to get to 35 trillion very, very soon. And so we'll see what happens. Let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.